Hello traders, Gary Wagner with the Gold Forecast. Today on the last day of the month, September 30th, it is Thursday, and this is the Daily Report. Gold is currently trading at 1308, 1307 and change, right around in that area, but that's not the big story. The big story today is that gold has hit a new record historical high at almost 1317, 1316.90. Just incredible. Traders, we are in a round of modest profit taking. I did recommend yesterday that aggressive traders actually take a position on the long side, 1278 as a stop. My recommendation, because of the volatility in this market, is not that conservative traders enter the market, but that the aggressive traders that might have taken that call actually exit that trade. That is correct. We've hit these highs. It could, in fact, move higher. I want to see it form a base. But with the kind of moves that we've seen recently, I am not convinced that this market is going to go higher before having a pullback. I am convinced this market will go higher. My sentiment is that longer term, I am looking for opportunities to the upside in gold. However, for the shorter term right now, with the kind of volatility that I'm seeing in the market, if we see a large rally in the dollar, and I'm going to talk to you in a second about why I think that might not so much might be possible, but kind of a rumor that is kind of going around right now, and this is according to Kitco. If in fact we do see a sell-off in this marketplace, we either want to be on A, the short side, or B, neutral in the market, looking as I do on most occasions to simply buy the dips. Now, what I am talking about is that there has been an article, this is out of Kitco News, that U.S. House Committee consideration of formal charges of Chinese currency manipulation. This is according to Ira Epstein, director of the Epstein division over at the Lind Group. This may trigger a backlash from China, with the most likely outcome that China could curtail purchases of U.S. Treasury securities, which in turn could drive real interest rates higher and therefore rally the dollar. It is just a rumor right now. This has only been confirmed through this one source, but I do find it to be the kind of article that might in fact move this market, and I certainly do not want to be on the wrong side of the fence if this market decides to take a sell-off. Traders, we're looking at a monthly chart. This is a monthly chart, as I say, currently trading 1307, 1308. It has been trading lower as we speak, very, very quietly lower. My sentiment is, of course, that I want us at the end of the month really to take a look at the kind of activity we've seen this month. Just astronomical. An incredible month when you see it has just been a beautiful move to the upside, well above $1,300 per ounce, and currently forming a base here. We'll have to see. Let's go ahead and take a look at a weekly chart. This is our weekly chart in gold right now, and as you can see, let me blow that up for us, traders. We have had this continuation, this uptrend, this breakout above 1300. This all started just below 1160, so we have virtually had a $150 move on this one track up, this one channel up, this one wave up. It has been an incredible, incredible run for gold. Another piece of fundamental news that I find interesting and definitely worth us noting is that the hedge book came out today, and this talks about the mining companies themselves. There was a 2% increase in their hedging that was reported. Now, what this means is that there is, I believe, great risk at this point that at any point somebody can pull what I'll call a profit trigger and send prices downward, spiraling downward quickly. If that's the case, we want to either be a neutral in the market, or B, we certainly want to position ourselves on the short side, but we don't want to be in a long position. And so for that reason, my recommendation is that for the current time, we remain flat in the market and delineate what's going to happen over the next 3 or 4 days. We're going into a long weekend starting tomorrow. And my recommendation is let's sideline. We've pulled some good profits out, not as much as I would have liked to, but we've pulled good profits out of the market. Let's sit on the sidelines and let's see where this market wants to go before we make our next determined stab at the market. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for the weekend review. Bye-bye.